It's just really choppy in a narrow trading range. And of course, nobody wins when that happens. But if you put the guidance chart up against a MACD or moving averages or stochastics or whatever else you normally like to use, I mean, those indicators would have got completely killed on a day like that in a choppy market, where the guidance chart, maybe just a small loss because half the day or part of the day was no trade. Clearly, you're going to get a lot of no trade zones when the market's sideways or choppy. And that's what makes it special and gives us the big advantage. Here's an S&P Mini right at the open today. Absolutely perfect no trade zone. And that's exactly what happened. The software said it's going to go sideways. You got these blue dots below, meaning it's going to have a very difficult time breaking under the blue dot. It's kind of like saying there's a wall there or a roadblock. It's invisible, but our software's algorithm, which is what the whole good point of the purpose of Abel trend, what gives us the edge is the algorithm, and it tells us where the hidden or invisible support in the market is. And it's interesting how before it happened, 5 or 6 times the prices really did go to these blue dots and stop. So there really was some support there that kept us out of a potential losing trade, kept us on the sidelines, which is the best thing to do, is not trade. Before knowing this before the markets get choppy, obviously, is a very big advantage for everybody using a guidance chart with Abel trend. Red dots above says there's resistance, blue dot below, so it just told us to stay away, and it's a good thing we didn't, because it really did go sideways and was extremely choppy, as you could see, up and down, and just can't make money under those conditions. But our guidance chart nailed it before it happened. Definitely a buy signal right here, triple confirmation, no red dot above, so it has a clear path to go higher. All we want to do is make sure that we don't have a dot blocking the path we want it to go. If we're buying, we can't have a red dot above because that would block it from going higher. If we're selling short, we can't have a blue dot below because, again, that would block it from going lower. That's all it is. Mixed colors simply means stay away, move on to something else, or just, certainly don't trade this, but don't trade that chart or this particular chart. When everything is blue, it means to buy. When everything red, it means to sell short. That's really all it is. If you think about it, it's like, yeah, you know what? It is kind of simple. That's really all we're doing. And any mixed red or blue dots together, at the same time, like right here, this no trade zone or this no trade zone simply means don't do anything. It's too risky. If you feel the need to trade, just trade something else. Look for another chart that doesn't have a no trade zone at that time. Look for something that has everything in alignment. Is it all blue or red? That's all it is. It's easy to read the chart, I think, especially if you have a little bit of practice. The hard part is doing it. That's the hard part because, there's real money at risk, and obviously, it's emotional. So that's the hardest part, and you can't teach that part. That's why the indicator works so well, because it has zero emotion. So if possible, the more you can put your emotions aside and follow the indicator, because this is our roadmap or our GPS to our destination. Well, the more we can follow it and stick to it, the better off we would be. So on the S&P Mini, we do have a buy signal here that we did pick up a couple of points on this trade right over here, where we're of course exiting there. And now that one worked okay. That was 2.5 points, and then of course a no trade zone here. But we're going to give back a point because any one of these blue bars is a valid buy signal, just as well as this one is here. But we're going to lose 1.5 points because, of course, we have to get out on the red bar. So we picked up 2.5, but we gave back a point. Let's say 1.5 points. So we'd be plus 1 point. We got a no trade zone here, but clearly we have a really nice. Let me start all over with the. Here we go. We had a really nice sweet spot trade right there. We were only 1.5 points from the red dots. So anything under 3 points is considered a low risk trade. That's a valid Abel trend trade. Of course, the closer you can short it to the red dot, well, even lower risk because your stop loss is just a little bit above the red dot. So even if we lose, it's a small loss. So we can all live with that. Certainly if you're in the trading business, if you're a serious trader. But everything was in just perfect alignment right here. And the last half hour of the day, the market took a pretty nice little drop here into the close, which would be right about in this area right here. But that was 5 points, actually 5.5, but I'll just call it 5 because you're not going to max out everything perfect. It's just not possible. You can do it so fast as to place your trade. So, 5 points is kind of nice. We were plus 1 point going into the trade. So we wound up plus 6 for the day. So the S&P finally had a decent day because it's just been so flat and choppy, as everybody probably knows who's a serious trader. The markets, especially the S&P, has had all-time low volatility. The VIX has just been so low, meaning there's just very little opportunities to make much money intraday. But that's okay. If that's what we do, then we just stick it out. So pretty cool, pretty good stuff. It's just a question of kind of following along and seeing what you think. Take a look at one more quick one.